Well, hey there, freaks. It's your boy Marty Bent here to introduce this week's sponsors before the incredible conversation I had with Dan held well over a month ago at this point, but I think the conversation still is fresh today because we talked about Bitcoin's security and the future of Bitcoin security post block reward issuance cycle. But before we hop into that great conversation, we got to give a shout out to our sponsors this week, Cash App. You freaks already know all about them. They're the number one the number one finance app in both app stores for the last 2 years. The first P2P payments app to give you freaks the ability to buy Bitcoin, and they also have the incredible Boost program. So you get a Boost card, you personalize it with your signature, with something that you like, a lightning bolt, a Bitcoin thing, and then you get the card and you go use it at certain merchants like DoorDash, Chick-fil-A, Whole Foods, Taco Bell. I believe Subway's on the list now. The list goes on. You save a little bit of money. You can stack sats. And now, here at TFTC, we officially have a promo code, and the promo code is stacking sats. So if you have not downloaded the Cash App yet, use the promo code stacking sats. You will receive $5, and then another $5 will be sent to a charity of our choice. We're still deciding which charity. It may be Bitcoin related. It may not be Bitcoin related. I've been involved with some nonprofits in the past that I would like to support, but we're open to ideas. So if you freaks have any Bitcoin-specific nonprofits that you'd like us to help donate to, let us know. We'll look into them, and go download the Cash App today at the Google Store or at the Google Play Store or Apple App Store. We also get to give a huge shout out to Unchained Capital. Our other sponsor for this episode. Unchained is doing incredible things in the custody and loan world with Bitcoin. They're allowing you to use your Bitcoin as collateral to take out U.S. dollar-denominated loans, so you do not have to sell your Bitcoin. Friends do not let friends sell Bitcoin, and that is why Unchained exists. And on top of that, again, they're really focused on security as well, so their latest product, the Vaults product, is a 2 or 3 multi-sig solution that allows you to control 2 or 3 keys and sign a multi-sig transaction via their vault whenever you need to. And if you need Unchained or another third party, they can step in and be the second signature in the 2 or 3 scheme if you ever need that to happen. So go check out Unchained's Vault program today at www.unchained-capital.com/vaults. That's www.unchained-capital.com/vaults. If you sign up today, you're going to get 3 months free of Saifedean Moose's The Bitcoin Standard Research Bulletin. High-quality information for free. The Unchained folks are hooking that up. So go check out Unchained today, and I hope you freaks enjoy this episode with Dan Held.
Tales from the Crypt.
What is up, freaks? It's your boy Marty Bent here at the final interview of Blockchain Week here in New York City. It's been a hell of a... Jesus, at this point it's been like 10 days, 10 days, with Magical Crypto Conference, Consensus, and then the festivities afterwards. I'd like to reintroduce you freaks to a man who's already been on this podcast. Welcome back, Dan Held. Dan, how you doing?
Thanks for having me, Marty. And I think in dog year, crypto is it's like a dog years. So 10 days is actually more like, it's like 70 days.
Yeah.
That's what it feels like.
I'm feeling pretty haggard right now. Pretty haggardly. I feel like I've taken a couple years off my life.
It feels a little better that we're on a sunny, beautiful roof with a Bloody Mary in our hands. I think that definitely makes the week a little bit easier to digest.
Yes. We had to end it out in style. It's a beautiful, beautiful Sunday afternoon here in Brooklyn, New York, and we're on the roof enjoying some Bloody Marys. We got some college lacrosse on silent in the background, Penn State versus Loyola, and we're here to talk about your most recent article that you dropped, Bitcoin Security is Fine.
Yeah, it's an important article that I wanted to bring to everyone's attention. This is part of a series with my company called Interchange HQ, is the website interchangehq.com. It's a new part of our series called the On-Ramp, which is topics for institutional investors around different functionality of blockchains and crypto and Bitcoin. For example, some of my older articles are around like proof of work. This one is around Bitcoin security model, which is a really important topic that a lot of people have been very concerned about. The idea being that as Bitcoin's block subsidy, or newly minted Bitcoins, as that drops, as it becomes less of a percentage of the block reward, that Bitcoin will have to rely solely on transaction fees to fund its security. And there's a concern that the transaction fees won't be large enough to compensate miners and properly secure the network.
Yes, this was a 20-minute article and a 68-tweet thread on Twitter, if you freaks haven't seen it yet.
I apologize for everyone. Normally I'm very succinct, and I was as succinct as I could possibly be. It takes a lot. There's a lot of different pieces to touch when writing this. It's not. It was one of the most difficult articles I've written.
Why was that? Yeah. It is very extensive. So, how did you attack this? What was like the first principles that you would attack and then go from?
Well, there's a couple big components. One would be the uniqueness of Bitcoin's block space, that it is a prime real estate. It is not just any old real estate. It's not any old block space. It's prime and unique. So that's an entire section. The price elasticity of transactors is another section. So how much will people be willing to pay in transaction fees? Modeling what happens in the year 2140 or post block subsidy is that's kind of a whole, we had to build an Excel model for that. Looking at let's see what else there was, in going down, modeling out 2140 transaction fees and what happens in a post subsidy environment. I had to touch on topics like the block the block size. Which I'm not advocating for an increase. I had to go, re-dive down that rabbit hole and look at what the trade-offs. It's been a little while since I had thought about it. So, let's see. Yeah, we had that. There was also, modeling out. I had to work with a data scientist on modeling out, long-term trends and when like the crossover where transaction fees will, have a larger percentage of the block reward than the block subsidy. So a lot of different components.
So what's the most important part? Transaction volume picking up, or the inflation rate of Bitcoins being produced falling below a certain level where miners will demand more fees?
Yeah, so I'm not sure if there's any one singular most important topic,
Mm-hmm.
but what I found interesting as I dug into it is that what the block reward really represents when it's because it's comprised of the block subsidy and transaction fees, is that crossover where transaction fees eventually replace the block subsidy is really just an organic trade-off between increasing adoption and it essentially as it becomes increasingly adopted, then transaction fees will compensate. And because of the halvening event, as Satoshi talks about, when more people are chasing less supply, the prices go up, people FOMO in, price goes higher, people hear about it. We've seen these cycles along the halvening events bring in greater and greater awareness to Bitcoin. And so essentially each time the supply gets cut in half during the halvening event, we have a supply shock where demand is chasing less supply. And then the price goes up, people FOMO in. And so as the block reward, as the block subsidy decreases, then we see with these spikes. And those spikes bring around greater awareness and adoption, which increases transaction fees. So it's sort of this nice organic trade-off where as the block subsidy drops, more people become aware of Bitcoin through the bubbles, and then more people transact.
Yes, and this is something that I'm happy you highlighted and we were touching on right before we hit record, is comparing Bitcoin transaction fees to the transaction fees of other similar stores of value, whether it be real estate or gold, the movement fees, the fees that you pay to move gold and whatnot. And that's something we're trying to, me and you and a bunch of other people talk a lot about narratives and trying to fix broken narratives of the first decade. One of those being is low transaction fees. And so we're trying to convince people like, hey, yes, fees are going to rise, especially in U.S. dollar terms as the price of Bitcoin rises, because fees are in Satoshis per byte. So the value of the tokens going up, so are fees just naturally, and trying to
to explain and convince people that this is okay. And I really liked you comparing it to other store values, and that's a great way to frame it.
Yeah, we can certainly look at other stores of value and what people are willing to pay to transfer those stores of value as an appropriate price elasticity. And so, unfortunately, we had this early cohort of Bitcoiners, former Bitcoiners, now Bcashers, that wrongly believed that Bitcoin is for their cheap coffee payments, which was not at all what Satoshi, not at all Satoshi's intention when he built something to disrupt central banks. So they unfortunately kind of ruined, public perception and expectations.
Yeah, false assumptions.
Right, and so people expected the cost to be zero, which doesn't make any sense because why should it be free? And when something's used and valued, it's expecting it to remain free is kind of absurd. So, yeah, as we look to the future, fees will increase. That is just going to happen due to its natural growth and adoption. And that will not hurt Bitcoin. It will be fine for Bitcoin because you shouldn't be using it for your coffee payments. You should be using Lightning for that. So we can look at other stores of value or other large value transfers to look at how much people are willing to pay or their price elasticity to send that money. So wire payments in the United States are between like $30 and $70. That's much higher than fees are now, and that's what almost everyone does when they wire money. And that's on the lower bound of costs. We can look at physical gold delivery, where you've got security guards and you've got insurance, and you have to, and then you've got all these other things you've got to do to deliver that gold, and that's really expensive. Donald McIntyre looked at how much it cost the Bundesbank when they repatriated. Yes, sorry, the Bloody Mary's kicking in here. When they brought their gold back from the U.S., I think it cost them, I forget the number.
I think it was $4.2 million.
Yeah, it's like $4.2 million. So that's a very high price elasticity. And then I think one of the ones that really, really touches on how high people's price elasticity might be is real estate transactions. So the Chinese are buying $40 billion of U.S. real estate annually.
We can see some of it here that's being built right now as we look out into the skyline.
Real estate is a very common store of value. As Connor Brown recently wrote, I think 20% of some neighborhoods are solely used as store of value.
Yeah. It's we can look out at them right here, and that's what let's tangent on Connor Brown's that intrinsic value article. It was really eye-opening in a different framing that I haven't heard before, and it was just accepting the fact that Bitcoin has no intrinsic value, and this is actually good because it opens up current stores of value that do have intrinsic value to actually, instead of being used as a store of value, to go out and be productive goods.
Yeah, Connor Brown kind of exploded on the scene recently, and really brilliant law student from Stanford. And I thought that article was, I've been in the space for 7 years and never thought about it that way. I thought it was brilliant.
Right.
So the TLDR is like that gold, by having a dual purpose of being useful for both electronics and a store of value. The store of value use of that commodity actually is a net negative because then it displaces that gold that could have been used in electronics. Similarly with real estate, we have all these unproductive or non-used real estate assets and all the concrete and all the materials used to build them. And so its dual use as a living space and as a store of value. The store of value use case decreases its utility as a living space. And so Bitcoin having no other utility other than being a store of value is the most efficient store of value out there.
Exactly. And it got in, and Connor dove into San Francisco and that real estate market in particular, where you have the residents who own the houses treating their properties as stores of value and not letting any more real estate be built, essentially. And this causes some perverse externalities.
Oh yeah, I live in San Francisco, and the rent is the highest in the nation because people, the older residents, it's kind of a Ponzi scheme. The older residents want to preserve their property values and are stopping all building from happening. And so now there's perverse incentives because properties are being used as a store of value that thwart the essential growth of an entire generation. So yeah, we're seeing really perverse effects of people using commodities or other assets as a dual purpose store of value and then its original utility.
Yeah, no, it's again, shout out Connor for bringing that framing to the fore, because it really is like, oh shit. Like, imagine if we're using gold to get to space to mine asteroids to make gold basically used completely priceless at that point, but like also would help us explore space more. Like, we can open up these commodities for things that can help us move into the future, move into hopefully a Type 1 civilization.
That's what we're going for. We're trying to get to the moon.
Right.
And so, yeah, back to the original part about price elasticity. So Chinese transactors are willing to pay pretty high closing costs in the thousands of dollars to purchase this property. And by the way, if there's a trade war with China and Trump wants to, at the snap of his fingers, he could seize all these assets and call them illegitimate or something like that. So what is a price elasticity for someone to transact in an immutable, hard to, almost impossible to seize asset? That's
that scenario does not seem too foreign to me, or improbable, especially in like the last climate of the last few weeks with the trade war heating up. And we've actually seen this already in Saudi Arabia with the Saudi Arabian government freezing the account of one of the princes who had like $8 billion or something like that.
Didn't the prince freeze the accounts of like all of the other princes, like the main guy?
Yes, yeah. Something happened where they got frozen out and billions of dollars just gone.
Yeah, what's a billionaire willing to pay to store their value somewhere?
Right.
What's an average person willing to pay to take their entire life savings out of a country?
Well, yeah, and so let's hop back into this conversation. Like, how do we make the masses comfortable with this? Do we make the masses comfortable with this, or is it something a quote unquote problem that'll get bitched about in perpetuity?
Yeah, it's a lot about expectations. I think when I did my post-subsidy modeling, which Paul Storks actually came over to me and complimented me on some of the modeling. He liked it, which that was kind of cool. I really respect Paul.
I really respect Paul too. I did not get to introduce myself at the blockstream party. I feel terrible. Yeah,
he wrote an article about the declining block subsidy and had a different conclusion, but he still, I think, liked a few things that I highlighted. But yeah, if you model out Bitcoin's transaction fees for Bitcoin at 10 to 100 trillion market capitalization, we're only looking, and then I also included a lot of assumptions, which were over 100 years. We have, I think it was like a 4x block size increase over 100 years. Some people are like, that's overly conservative. Some are like, you're out of your mind. That's crazy. I'm not advocating for a block size increase. I
Did
plugged
Luke
it in.
Dash Jr. yell at you? He said, no, we need smaller blocks.
He hasn't yet, but I'm sure he will. So yeah, I just to get the conversation going, I plugged that in, and then an increase in efficiency on layer 1, and then modeled out. So right now we have a pretty interesting path, or sort of a pretty nice curve going in terms of transaction fees as a percentage of market cap. And so I use that to model out Bitcoin's long-term costs.
That chart in particular, it is crazy how how the variance around sort of the mean of like the slope at which like transactions are rising is pretty smooth. But if you look at like over time, it's like up and down, very volatile.
Right. It's largely around market cycles.
Yes.
So as the price goes up, people start to trade more, people start to move their coins around. But we are seeing established floors at the end of those cycles. And it's moving up very, very slowly. But we are seeing those floors being established, which is good. So we're seeing a nice trend, and that long-term trend points to transaction fees costing, in aggregate, 0.001% of Bitcoin's market cap daily. So annually, that's 0.365.
And you come to the conclusion that the security spend in the hundreds of billions, correct?
Yeah, so
not an exact number, but
yeah, at 10 trillion, you're looking at a security spend of 36 billion annually. At 100 trillion, you're looking at a 365 billion security spend, which I think is very, very strong. I highly doubt that a nation state will waste $360 billion and just burn it instead of taking the money. I mean, they have to respond to their citizens if they did that, right? So
Yeah, so let's dive into these game theoretical threat scenarios where a nation state tries to 51% Bitcoin. One, it's expensive. Then two, the fallout socially seems to be a heavy cost as well.
yeah, so to zoom out a little for a second before we dive into the nation state cost estimations or like game theory, what is an appropriate level of security spend? Nick Carter highlighted it really well, which is it stock, flow, or threshold? And I think it's not flow, because miners purchase these ASICs for long-term purposes. And as ASIC efficiency decreases over time due to the laws of physics, because they can't make the chips any smaller, ASICs will be purchased for their longevity. So miners aren't going to play short-term games and try to game the system for like a short-term payoff. They bought these machines and they need a cash flow for a very long time to make them profitable. So I think stock, or a percentage of stock, which is what I modeled my charts after. What's the percentage of market cap that represents Bitcoin's security? And also something I could model using historical data that I think eventually reaches a threshold level where it's just so improbable game theoretically that someone would attack it that we can basically say it's secure. And so what is that value? We're not sure, right? It depends on what the market cap of Bitcoin hits.
Mm-hmm.
Like the final hyper-Bitcoinization market capitalization.
Yes, and it goes back to that conversation that we were having earlier. Is if people sort of realize that the current assets they're using for source of value, whether it be gold or real estate, sort of have opportunity cost by using them as a store of value, and they come to adopt Bitcoin as the only store of value. So yeah, it's interesting because it would have to eat up most of those market caps, and it's
Yeah, I mean, gold's a 6.5 trillion market cap. You got the classic gold plus fiat money, which is 50 to 100 trillion, and then real estate, 250 trillion market cap.
well, I was telling you about how I interviewed David Bailey earlier this week, and I love his TAM, his total addressable market. He's like, anybody thinking like stores of value, like 100 trillions, like real estate, gold, stock market, whatever it may be, is like thinking too small. Like the total addressable market is the cost of all the energy in the world on a long enough timeline.
Yeah, I mean, I've got some kind of zanier ideas in terms of really out there market caps, but I don't want to be labeled as like a lunatic.
Yeah, let's tame our expectations, but
Yeah, exactly.
it could be a lot bigger than we expect, right? And
What are people willing? I mean, how many people are willing to store their value, their stored time and energy, which is their money, and something that's immutable and hard to seize?
well, again, to bring David back into it, is like his analogy really opened my eyes. Like when the internet was created, if you were to tell people that it would record more information in one day than ever was recorded in human history up until the point that the internet was created, people would be like, "Fuck you, that's crazy. There's no way."
Oh, totally. Yeah, just to pull out a cell phone in 1990 to pull out like an iPhone, people's minds would have just exploded. Yeah, it would have been unfathomable. Like, whoa,
Right.
this is it's magic.
So when we think about projecting Bitcoin's total addressable market in the future, and we're thinking of these constraints that we live under now, just think about the constraints that people are putting on the internet and how much that exceeded their expectations.
Yeah, and also, I mean, when you think about it, like when people buy into Bitcoin, they have to buy it from the hodlers. So it's not going to be a linear, you're not just going to transfer 100 trillion and put that into Bitcoin. As you buy as those other world assets flow into Bitcoin, the price goes up.
Yeah, and I think I just saw actually a tweet updating us on hodl waves. 60% of UTXOs have not moved in over a year.
Yeah, so good luck.
Right?
Good luck transferring your trillions into Bitcoin. I mean, it's not people aren't going to willingly part for it at spot. It's going to go up a bit.
Yeah. But let's bring it back to security, how we attain that, like what drives demand for fees. And one thing we've brought this concept up before on this podcast, but let's expound upon it more on this episode in particular, is Jevons paradox. And so basically utility of layers or services built on top of Bitcoin driving demand for the the underlying resource, which is block space. So
Yeah. So, and to kind of make sure everyone's following us here, because this can be complicated. Bitcoin has block space. Every 10 minutes, there's new block space to bid on, and people pay transaction fees in order to get their transaction in the block. And so, what's in terms of the, will people use Bitcoin's block space? Will it be unique? Will there be demand to use it? So we've touched on the price elasticity of what people are willing to pay for a store of value use of that block space real estate. So to kind of touch on, we can talk about the density of that block space. So as Nick Carter puts it, we can increase the economic and semantic density. So semantic, I'll just touch on for a second, which is like Veriblock, where they use Bitcoin's block space to route their own blockchain into Bitcoin's blockchain and have that thermodynamic guarantee of a certain state has been validated at a certain time. With economic density, we're talking about things like Lightning. So, Lightning, when you open and close a channel, those are two transactions on layer 1. How much economic density is included in that is essentially all of the activity that happened on layer 2 in that channel. So, block space in the future, the demand for it, and we're already seeing some of this now, will be driven by these other layers and these other economic and semantic, more dense things, rather than just a transaction.
yes, and the crux of Jevons paradox is that people leveraging the scarce resource, which is, again, the scarce resource in this scenario is block space. So Lightning takes up that space by opening and closing channels, Veriblock by hashing data into the Bitcoin blockchain, and we talked about a crazy chart earlier. The craziest chart in my mind was the Lightning channel activity on chain.
Yeah, there was a block with 25% of the block was opening and closing Lightning channels.
Right.
That's pretty nuts.
That's crazy.
Yeah, and Lightning is still very much experimental. So I thought that was incredible. Yeah, there's a worry. So a lot of people have argued, oh, well, Lightning will suck away transactional demand on layer 1. And so that's where Jevons paradox comes in. Whereas Lightning makes Bitcoin more efficient because you can move more money on layer 2, and sort of the net value between those two parties on layer 2, that net value is printed on layer 1. And people were like, oh, well, that's just going to suck up all the transactional demand from layer 1. But that's definitely not the case, because we haven't seen that happen, even though Lightning is 25% of some blocks. Through Jevons paradox, we know this not to be true as well in the real world, where as miles per gallon for cars became more and more efficient, so cars became more fuel efficient, more miles were driven. People don't use less of something because it becomes more efficient. They usually use more of it because it becomes more efficient. And so Lightning will drive increasing demand because it makes Bitcoin more efficient and more open to other use cases rather than decrease layer 1. So we've seen data show that Bitcoin's doing just fine with Lightning taking up 25% of blocks. Jevons paradox shows us in other areas that we know that efficiency increases usage rather than decreases it. And finally, Bitcoin transactions on layer 1 cost it's satoshis per byte, which is about size of data size. Layer 2 is about the size of the value. So there's a crossover point eventually to where it's actually more advantageous to move your transaction on layer 1 depending on how big the value is.
Yeah, there's an ebb and flow, yin and yang there, and it's all based off the assurances of the protocol level and sort of leveraging that to create utility. And Bitcoin is proving to be useful. And one of my favorite sort of thought experiments that revolves around Jevons paradox of Bitcoin that's created via Bitcoin and Lightning and their relationship in particular. This is something I've talked to Pierre Richard about before, is the potential for the Bitcoin protocol level to become like a quasi Rhinestone system where you do on-chain transactions very, very rarely, but everything's moved to sort of Lightning. And so this is going to be blasphemous to some big blockers and purists out there. But it's an interesting thought experiment to think about, because as we're discussing with Jevons paradox, depending on the value going through Lightning Network, like you could potentially see it developing into a Rhinestone system in the future. And is that okay?
Yeah, I think that's totally fine. I mean, what's nice about all this is it's a very organic sort of system to where the market will dictate it. And I think that's what's so brilliant about a lot of these decisions, because these decisions were largely the market will decide, which is great, because I believe in capitalism being the ultimate decider for how to allocate capital and how systems are built, because everyone's financially motivated and incentivized in the right way to do it that way. There is no central point of control. There shouldn't be a central point of control in capitalism, because inherently there's a data problem. You can't ingest enough data points in order to make decisions for the economy. So Bitcoin is largely going, hey, well, we're just going to let the system do what it wants to do. We're just here to, like, Bitcoin sort of like software and rules that have been set up are like largely just a framework.
Yeah, and Bitcoin doesn't even know how we're using it. It doesn't know how we're using it. It's just like, hey, I'm going to do this thing. You guys use it the way you see fit, and the
Totally.
market will figure that out, right?
Totally. And I think like the TLDR of my piece is essentially people are worried like, oh, will Bitcoin security be enough? And I'm like, well, if people don't use Bitcoin, then it's dead anyways. So the security doesn't matter. Like if Bitcoin isn't being used for large stores of value and there's not like increased transactional demand on layer 2, like then it's a failed experiment, right? And so worries about what happens in 100 years when the subsidy runs out, I'm like, well, if it hasn't like very much succeeded in the next couple decades, I think it'll be largely as failed. I think I will perceive the experiment as failed.
When do you think? So let's talk about the mechanics of the distribution of the quote unquote reward. So the reward is the combination of the block subsidy, which is dictated by the protocol. Right now, it's 12.5 Bitcoin per 10 minutes, and the reward is the subsidy plus the fees, and the fees are dictated by the market, again, depending on the demand for block space at any given point in time. So there will be a point in the future where the subsidy and fees will have to reach parity, and eventually fees will obviously have to overtake the subsidy. This has happened before in 2017. 17 in December, there was a block where the reward and the fees were above 12.5 Bitcoin. Yeah,
the transaction fees in a certain block in 2017 were larger than the block subsidy.
Mm-hmm.
So yeah, we've already seen that happen.
Mm-hmm. But when does that have to become consistent, do you think?
Yeah, so with the modeling that we've seen done, again, the transaction fees they fluctuate quite a bit given the market cycles, the bear and bull market cycles. And so, but we do see floors being established. And so I'd recommend checking out the article where these nicely designed charts by Awe and Wonder. He did a great job. They're really, really slick.
Right.
He's one of my favorite chartists in the space. I think that's the right way to put it, like chartists.
Yeah, it's crazy. It's just like an anon providing this like dope
I don't know his real name. Yeah. Right? I don't know his real name, and we did the whole thing over Twitter DMs. So
this is how this is what blows my mind about the space. Blows my mind about this week is apparently there are some people I've been wanting to meet online, and I was in the same room with them, but was not introduced. I was like, what the fuck, Mr. Hodl?
He was there? Because I was at the same party you were
Mr.
at, the
Hodl,
block stream.
If you're listening to this, I'm pissed that you did not introduce yourself.
Yeah, I ran into a lot of people I wanted to see, but yeah, I didn't see Mr. Hodl. That would have been awesome.
Yeah, it would have been.
Yeah.
It would have been.
But yeah, I think a lot of the concern, the blocks, essentially like people are like, oh, and then I think a couple other important things to touch on here would be, is Bitcoin's block space unique? A lot of people go, oh, well, in 2017, consumers were, trying to route payments based on cheap fees. So I fundamentally dismantle this argument piece by piece.
Compared to Litecoin.
Yeah, so here's the way to think about it. Is Bitcoin's block space just any old real estate, or is it prime real estate? And it is very much the most prime real estate you could possibly want. And so Bitcoin is prime real estate for 4 reasons. It's due to so when you look at block space, its uniqueness is based on transaction cost, coordination cost, security cost, and volatility cost. So users in 2017, transactors in 2017, were not simultaneously looking across Bitcoin's block space, Bcash's block space, Litecoin's block space, and simultaneously looking at like exchange, like slippage, looking at transaction fee and volatility fee. So how much is it going to fluctuate over your time period? And volatility fee, by the way, has a nasty, nasty problem, because as your transaction value goes up, the volatility becomes increasingly more painful. So a $100 transaction that fluctuates 10% will cost you $10, versus a $10 transaction that fluctuates 10% will cost you $1. So users were not simultaneously scanning across all these block spaces, evaluating all of those factors, and then routing their payment. That's fucking bullshit, to be frank.
And on top of that, you have capital gains tax that you would have to pay on the switching costs as well.
Yeah, let's say it goes up in value instead of decreases in value. Well, now you own capital gains on that. So people aren't mentally doing that. No one was doing that in 2017. What was really happening is that there wasn't the meme of Bitcoin's transaction fees were increasing, therefore people sought out other block spaces. Completely false. People were just doing degenerate trading. People weren't simultaneously scanning across all those block spaces and routing it based on cheap transaction fees.
Think of the mental costs that come with that model, where you're purveying the field of alternatives from a fee perspective to Bitcoin. It's just, especially if you think about mass adoption and applying it to quote unquote normies who we expect, like, they're not going to think this way.
Yeah, as Connor Brown puts it, multi-coinery is barter. He keeps coming up. But it was a good. I had that quote in my article because I thought it was really well placed. It is
barter.
It is barter. Otherwise, you're not solving the coincidence of wants problem.
That's why, that's why the ICO craze never made any sense to me. Excuse me. Vodka's kicking in pretty heavy here.
Dare to DeFi. Dare to.
But it never made sense to me because just as a quasi, as somebody who views himself as a dumber user or not an expert level when it comes to using all this stuff, I just thought, there's no way anybody's going to interact with their world, trying to go token to token to token for every service and quote unquote app they use. I only use 3 apps really. Every day, and that's Twitter, Spotify, and a couple other things. Thinking that you're gonna use these new token apps and insert them in your life just never made sense to me because of the mental costs that come with it.
Totally. And to play devil's advocate, I'll defend the other side a little bit. So some argue that we could obfuscate all of these other coins. So we just put a GUI in between you and that.
Interoperability, bro.
Yeah, or we auto sell your taco coin for your beer coin. But the problem with that is then you have to have an order book for every single one of these coins, and there's no way that order book's going to be as liquid as Bitcoins will be for big fiat pairs. So you're going to have increased slippage costs for every single transaction, which doesn't make any sense. It increases complexity, it increases slippage, and increases friction when people transact.
And if it were ever become a thing, it would just increase systemic risk because you have to have market makers step in to create those markets, and it would.
Yeah, for every Whopper coin, taco coin, vodka coin. It doesn't make any sense.
No.
You want one store value that's also unit of account where everyone's mentally, as humans, intuitively they're just going to stick to a couple.
What makes the most sense is you could walk around the fucking world and scan a QR code and spend Bitcoin wherever, and not have to worry about if it's Whopper coin or whatever. You just know,
totally,
no matter where you are, somebody. Eventually, at some point in the future, all merchants will be able to provide you with a QR code that hey, here's some Satoshis from the Lightning Network.
I mean, let's get real fun with it. I mean, in the future, when Bitcoin's a unit of account, which is a long time from now, we ain't going to be using QR codes. We're going to just look at something and buy it.
Facial recognition has been a hot topic on the podcast recently.
Ooh, what came up about that?
No, it's just that we rabbit hole recap this week with Bitcoin Sign Guy. He joined us, and we talked the subject of facial recognition technology being deployed in the UK in particular, because there was a story of the man this week who was walking down the street in London, and the cops warned him, hey, ahead here, we're doing facial recognition, just to let you know, and he did not like that, so he put his sweatshirt above his face and tried to walk by, and he was stopped because he would not participate in the facial recognition, and he was fined £90. It's obviously a sign that our civil liberties are being encroached on, and the surveillance state grows. But then you get into the whole conversation of Bitcoin Sign Guy actually brought this up. Yes, it's overt right now. They have vans with cameras on top that are looking for people, but as the increase of what's the word I'm looking for? The increase of sort of resistance and from citizens becomes more intense, they'll just use cameras like iPhone cameras and put them on places where they're imperceptible. So basically coming to the conclusion that the surveillance state is probably inevitable, and that we should be focusing on technologies that do preserve our individual sovereignty and freedom, and that's like Bitcoin presents one of those opportunities. So if facial recognition and being spied on 24/7 is gone, we should focus on things that we can.
Totally. Bitcoin fundamentally is about freedom. And to be able to, in money, I would argue, is one of the most important things in the world because it represents that stored time and energy. It represents your retirement account, represents your entire lifetime of working, of sacrificing time and energy to earn that. So the preservation of that, I think, will bleed into other things like privacy, like from the state. As citizens withhold that stored time and energy from the state will have to give them liberties or whatever they like in return to give up some of that stored time and energy.
Yeah, and we got into the concept of surveillance-free zones and people willing to pay taxes to have that luxury be a reality. We'll pay for it, right? It's crazy. It's we've never lived in again, obviously the arc of human history and human progress is up and to the right, and we're always at the cusp of the pinnacle of man. Being alive in the present, but it is crazy how much information is being consumed. Like, again, going back to the internet being able to produce more history in one day and record more history in one day than was ever recorded up until 1997. It's crazy, and dealing with the consequences of that change psychologically, chemically, socially is something we're coming to grips with.
And privacy is a tough problem because how many people use VPNs? I mean, I don't use it every day. I should, but I don't.
Yeah,
but it's pretty easy to use,
right? It's shout out Molvad VPN. I've been using that. It's very
nice.
intuitive, very paying Bitcoin, and it's just automatically on all the time.
That's pretty cool.
Yeah,
nice.
Yeah,
but yeah, it's hard though. Like people people outcry whenever people cry out whenever they see like Facebook and other companies infringing on their privacy. But they continually give it to the state because they still believe the state is working in their best interest, where we see like they're not. Let's put it this way: if the CIA and NSA were thwarting terrorist attacks, we'd be hearing about it all the time. They'd be like, "Hey, we're here. We're still here. We're saving your life," but we don't because they think it's an extremely low interest right now.
Yeah.
Think about it, the TSA has a 95% failure rate.
Exactly.
So if anyone was motivated, it would have easily happened.
A TSA.
Or how about outside the airport or anything else? People were willing to sacrifice all of their privacy and freedoms for this largely illusionary sort of security by the state, which I think in the future there'll be cracks in that facade where people will realize the state is not actually providing them really any security. It's
yes,
very
if
minimal.
anything, they're harming people, right? The TSA is a big driver of anxiety and mental anguish for your boy Marty, because they are the most incompetent organization, most unnecessary organization. Like, why do we have the TSA at the airport, not the train stations? Not that I want them at the train stations. Please do not bring the TSA to the train stations.
Or how about the ferries?
The ferries.
Boats,
it's like
trains,
false equivalency.
bus.
I'm convinced that the TSA and airport security is just a testing ground for the U.S. government to see how much people will put up with. Like,
yeah, I mean, I'm not a huge conspiracy theorist. However, I do agree to some extent that, like, it is sort of testing our willingness to put up with crap like that, right? Like, if you had done that in 1950, there'd be fucking people rioting on the streets,
right?
But we're sort of like the frog in the pot of boiling water, where, same with the economy. Our privacy and our freedoms have slowly been eroded to where, like, people are like, oh, but I trust the government. And, people kind of forgot why we're here and why America was great to begin with, which is about freedom. And then we're slowly seeing that happen with the economy, where now, like, the whole economy isn't even looking at fundamentals anymore or risk. They're just looking at the Fed.
It's all about asset flows stemming from the Fed, right?
They're just going like, well, what's the Fed going to do? What's Trump going to do? And I'm like, that shouldn't matter at all. The economy should not give a shit what sure, they play some effect, but like that, they should not be the driving effect of the economy. It should be largely a capitalist system where, like, people are assessing risk and allocating capital versus, like, going, oh, what's the central policymaker doing?
Yeah, it shouldn't be whether or not is Trump going to tweet this morning or.
Totally. Yeah. Yeah. And if we have people in that sort of position of power, we should look to, create systems where we don't have one man or woman with all that power. It's obnoxious and ancient and kind of ridiculous.
A great poet we know as Kanye West said it best: "No one man should have all that power."
I was going to try to beatbox here real quick, but I'm too white for that.
I'm not going to try it either.
Yeah,
I thought about it for a second.
I thought about it, and then I was like,
thought about it too.
It's going to sound bad. Yeah,
the vodka beats are not as great as the tequila beats. We'll say that.
Coming from Texas, the tequila style, that's my jam.
Are you tequila neat? Tequila shots?
Tequila neat.
Yeah.
Oh yeah, I like to appreciate it.
Right.
Same with whiskey.
Yeah.
Like on a big cube is preferable. Like one big cube. I don't want it to be diluted that much. It is more of I want it like a little cooler so I can appreciate the flavor.
Yes.
Otherwise, the burning of it kind of like overwhelms the flavor profile. Some people a lot of like aficionados think I'm probably a heretic for saying that, but I think I can taste it a little bit more when it cools down a little bit.
What's your favorite tequila?
So let's see. Flor de Lisa is pretty awesome. It's kind of my go-to. And let's see. Yeah, Flor de Lisa is probably like my go-to. And then on the whiskey side, I've got like Japanese whiskey, like Nika Coffee Grain. Fell in love with that. It's so nice.
I love Japanese whiskeys too.
It's nice and smooth and beautiful. But like if I'm out Yosemite campfire, I want like a nice Macallan 12. So maybe something a little smoky or a little peaty.
What's the Yosemite campfire like?
Oh, it's beautiful. I mean, I've
never been to Yosemite. I've been told I need to go.
Oh, it's beautiful. I mean, you got these you're in like a gorgeous valley, and you've got like beautiful redwood trees, perfect sort of weather, and you got a fire going. You've got a glass of really nice scotch. It just that's what scotch was made for. It's like being by a fire.
It sounds like the way to live.
Well, when Bitcoin hits 100,000. In my library, we'll have some nice scotch by the fire. That's what we'll record episode number maybe 20 or something between us by that point.
Yeah, we should do this. We're on pace for semi-annually right now.
Yeah. The last time was like over 6 months ago, right?
I think it was just about 6 months ago. I think it was like October, November last year, right?
Yeah, and we did drink whiskey that time.
We did.
Yeah, because Matt was over at Matt Odell.
Mm-hmm.
Yeah,
we did.
We did a double back-to-back, right?
Yeah, we recorded, then we did a rabbit hole recap. And you busted out of there to go on a rickshaw date.
A rickshaw date. Let's see. Oh yeah. I had a dinner date that night. Yeah. Well,
speaking of Bitcoin 100,000, that's another thing. It's been more at the top of my head more recently. Like it seems again, bear market, everything trends back towards Bitcoin. The gravity of Bitcoin sort of sucks everything back to fundamentals. We've got lacrosse on here in the background. If you're a lacrosse player, if you're getting back on defense, you get back to the hole and then you expand from there. So in the Bitcoin alt markets, we're at the point where everything is getting back into the hole, getting back into Bitcoin. But with that being said, like the question that comes to people's mind is how many alt cycles are going to have? How intense are they going to be? Are we going to have returns like Ethereum's ICO going forward? I'm not as convinced that's going to keep happening because I do think there is a level of competence and understanding in the general market and brand recognition of Bitcoin is growing stronger as well. That I think 100,000 is like not that far off.
Bitcoin, the seed of Bitcoin survived all the way to here, which is incredibly bullish. A lot of things could have killed it. Flippanines, civil war with Bcash, businesses trying to insert some of their bias in the consensus mechanism, in terms of like protocol upgrades, Segwit 2x. Bitcoin survived a lot. Transaction fee FUD. I mean, every type of FUD you could possibly imagine. FUD. Can you imagine when people get positive about Bitcoin? Like journalists are like, "Oh, Bitcoin's a great thing." Can you imagine?
They just need to start buying it, and then they'll start writing that.
Someday.
They're all pre-coiners right now.
But yeah, I think the recent market activity is something that's I think a great topic. Which I think two things we can touch on. One being like alt season. and then the other being Bitcoin being the risk-off trade.
Let's dive into it.
Yeah, so alt season is something people like everyone. Which, by the way, if everyone's thinking that the market might do that, it's probably not going to do that, because otherwise it already would have happened in anticipation of everyone thinking that it might happen. For example, in San Francisco, there was an article that came out about the newly minted millionaires from Uber, Lyft, and other IPOs. Well, people were like, "Oh my God, housing prices are going to skyrocket because of all these newly minted millionaires." I quickly Google it and I check SF housing prices, flat. People would have already bought in anticipation of those millionaires being minted if people thought that was going to be a thing. So it must not be a thing if the market's not reacting to it. The market is the ultimate information absorber and reflects everything in the market. So if alt season is going to happen, we should be seeing it, which we saw a little pump from something from like Ethereum and a few the other day. But a lot of people don't realize that a lot of, on Twitter, when you hear these so-called experts talk about alt season, they're being extremely intellectually dishonest, because none of them are going back to 2014, the first altcoin boom, and comparing returns from 2014 through 2018. No one is doing that, which is your largest, it's your longest data set and your largest data set, because there was a wave of altcoins back in 2014, including like Dogecoin. It was one of the in that cohort, but they're not doing that. They're looking at 2016 to 2018. And so I think you should look at both data sets. We should look at all available data, but especially the longest running data set. We've got more time to evaluate what happens when alts rise and fall.
Yeah. 2013, 2014 alt cycle was all about proof of stake, multi-algo mining.
Oh, yeah, like Corecoin. Yeah, Corecoin, and there's Primecoin, which did something useful with the proof of work because it found prime numbers. I actually mined a whole block of Primecoin back in the day.
Really?
Yeah, so hope I don't get crucified for this. I'm a Bitcoiner, right? But look, I thought it was interesting. This is 2014, right? We're experimenting, we're checking things out. And then later down the road, I'm like, well, proof of work is already doing something incredibly great, so it doesn't need to do anything else. It's kind of a silly thing to do, but I realized that later down the road.
No, but it's a perfect example of again, marketers, snake oil salesmen, if you will, attempting to quote unquote highlight Bitcoin's perceived inefficiencies and add on them by spinning up a shitcoin that quote unquote solves that problem. And early on in those days, it was people were worried about proof of work, so that they're in.
To be clear, I didn't buy any, by the way. I just mined it on my company's computers.
Oh, that's the way to do it.
Yeah,
that's
exactly.
Get some clean prime coin.
Exactly.
But it's like
I wasn't about to give up my cold hard BTC for that.
No,
that's for sure.
But it's actually it's funny. Like another famous early altcoin, Namecoin, was probably probably the best example of an altcoin learning a hard lesson, because they shared a scripting algorithm with Bitcoin SHA-256, and they found that if you have scarce hardware, mining hardware in particular, it's going to compete on the open market, and Bitcoin obviously was the winner in the SHA-256 market, and Namecoin became highly susceptible to 51% attacks.
Well, I don't want to mess with Bitcoin's black hole. It's it'll suck you right in and crush you.
Right?
Yeah, it's I wouldn't want to compete.
No, but it highlights the almost the naivety of some of these projects. I try to assume that they're more naive than malicious, right?
Yeah, I think it's more naive than malicious, but also like if they spent a couple weeks really reading into it, they'd realize it's kind of bullshit. But essentially what happens is with the 2014 altcoin bubble and the 2017, 2016 like ICO bubble, it was just a Black-Scholes model of all probabilistic narratives. So like, you want Uber coin? Sure, we got that. You want Lyft coin? We got that too. You want Airbnb coin? Sure. Want a decentralized identity management on XYZ? You want healthcare on the blockchain? We got that. So essentially whatever meme you wanted to buy into, people made. 2014 was a more primitive version of that, but 2016, 2017 was much more sophisticated.
A lot more sophisticated, because the funding mechanism was a lot easier to spin up than that's actually the funny thing, comparing 2014 to 2017 was the scam. I don't want to say scammers. The people launching these projects noticed that because that was the big thing in 2013, 2014 was fair POW launches. Like that was on BitcoinTalk.org. Like that's what you looked for when these announcements were being made. Like, is it a fair POW launch? Like, are we going to be able to like point our miners at it exactly? And then like the ICOs realized like let's not even fucking worry about that. Like, let's just sell these tokens straight up before.
Well, that's what's funny about Grin is a recent example of that narrative. Because Grin kind of went back to the OG narrative of a fair launch.
Yes.
Which I wrote, one of my earlier articles is Bitcoin's distribution was fair. A lot of people like to, say Bitcoin is equivalent to a stealth mine, which is completely false. Satoshi gave people a 3 month heads up, from the white paper to when he launched it. He shared it with the only people that cared. He didn't just like. He didn't share it on an email list for dogs, right? Like he shared on this on the cryptographer emailing the only email list of anyone who'd give a shit, right? Like who the hell is who? People are like, oh, but he didn't like broadcast it on CNN. I'm like, no one would have cared. And Bitcoin didn't have value for a year and a half, anyways. No one valued it for.
No one would have cared. Yeah. How the hell would he have gotten it on ESPN?
Right.
ESPN, CNN. Wow.
Well, in Grin highlighted the issue that like a fair launch is extremely difficult, and I would argue not replicable past Bitcoin's initial launch. It's just not. You can't do it again.
And this is just a product that there being way too many eyes on the space. Like you cannot,
right.
You cannot. It's. I mean, we've talked about it. Like the Immaculate Conception is cannot be reproduced. It is
right,
and that's something that scares people too. It's like, well, we should be able to compete. Like there was MySpace and there was Facebook, but this is something very unique and very.
Bitcoin scares people.
It does.
Because it's like it's this rule set that's just not movable, and we're in a world of like nothing is like. So a lot of things are permanent, but we can usually change the rules if we don't like things.
That and what scares people more is that it's not like the most efficient in many people's eyes, the most efficient like technology that could exist for this use case, and that it's like people don't understand that like working with what we got with Bitcoin is more advantageous than trying to create something perfect from scratch.
Yeah, exactly. Like Bitcoin is equivalent to a rocket launch. Like we got everything right. It got off the launch pad. It's like 50 miles up in the air. It didn't explode yet. And people are like, oh, but what if we change the fins? And I'm like, fuck, man. Look, it's working. Like, it's magnificent. The fact that it's 10 years along, created by a pseudonymous founder, with no market making, with no, like, largely just a forum of Bitcoin talk of some tiny group of believers, a tiny, tiny, tiny group of believers. The fact that it survived through that stage and got to where we are now, where, like, you've got Bank of America and Goldman Sachs and Deutsche Bank, like, writing articles about Bitcoin. Holy shit, that's awesome. And, like, Bitcoin's daily trading volume and market cap, fantastic. I am so excited we got this far.
But there's something just inherent in humans that see, again, this has been repeated ad nauseum on this podcast, but Bitcoin is slow, dumb, and arduous, and that is okay. It's simple, and there's something about its simplicity that scares people. There's like, oh, you can only get 20 there's potential for 20 transactions per second. Like, that's not a lot. We need 1 million. Like, there's blocks every 10 minutes. Why aren't they 1 minute? There's a fee market. Like, why can't it be feeless?
99% of those are people just memeing what they hear other people saying, rather than like true experts digging in. Because true experts know that everything in life comes with trade-offs, and so the true experts go, well, we could have more transactions per second, but we'd give up some form of decentralization in some manner. And so most people are just memeing what they hear from, quote unquote experts in the space.
Cobra.
Cobra. That guy's got like bipolar disorder or something. Man, he's all over the map.
He or they have bipolar disorder.
Yeah, it's a couple people, right? Yeah, he, they. Yeah, it's
who knows.
A bot. Maybe it's a bot.
We'll find out. Cobra, if you're listening, let us know. Let us know.
To kind of wrap up on alt season, there are alt pumps, sure. But you're going to time it right? You're telling me you're going to sit there and you're going to buy right when it's at the lowest, and then you're going to sell right when it's at the highest? I'll let the experts do that. But as an individual, buying and hodling Bitcoin has outperformed every other crypto if you look at the return since exchange listing. Bitcoin outperforms Ethereum on that.
Really?
Yep. By magnitudes. So your best bet is and also your highest probable survivable outcome of all these coins is Bitcoin. So
that and also all you freaks listening to this who are thinking about like becoming expert traders, realize it's one of the most vicious careers, vicious things you can do is trade, and just literally the way the market dynamics work out, only a very small percentage of those people are successful.
Yeah,
So
stay calm and hodl on.
Exactly.
It's I build accounting software for institutional traders. Those guys are the experts. They're going to stay up all night thinking about this.
You got-
you don't want to compete with these
you
guys.
have crazy mathematicians writing quant models that
Exactly.
you cannot compete with, and then that's why we stress stacking sets here at Tales from the Crypt. Is
I love stacking sats. It's a great meme.
if you shout out Matt Odell, if you
Holla.
if you believe in Bitcoin and you think it is something worth investing in, don't try to play the swings. Just stack sats. Set a plan. It's not financial advice, but like create a plan and just stick to it. Don't get all freaked
Yeah.
out by the price movements and volatility. It's natural, but
Dollar cost averaging is the way to go. And I think a lot of people now look at the price and they're like, man, $8,000 is a lot of money. To anyone, I think. It's a substantial sum. So back when I was in it, way back in the day, when I first told my dad about it, I remember it was Thanksgiving 2012. And he thought $10 was expensive. Because he's thinking about it he's not looking at the total number of units, he's looking at the per unit value, which the market cap is a more appropriate question, right? But it's funny because like breaking dollar parity, then Bitcoin was perceived as expensive. And so it's always been, quote, too expensive. So I think, look, like when you look at the market capitalization of Bitcoin, what are we at now? What's the market cap, I think?
we were like 120 and between 120 and 130, I believe.
Yeah, I keep calm and hodl on, so I don't check it too much in terms of market cap.
I'll
But
check right now.
let's check it out. I don't think, I originally bought Bitcoin way back, because I believe that Bitcoin is gold 2.0, or Bitcoin is a new store of value that will be an incredible value to people to allocate their wealth and preserve it. And so Bitcoin, I think, will not even have touched on its...
Ooh, we're at
what was the market cap?
135.
135, nice.
Yeah.
Bitcoin hitting a few trillion market cap, which is $100,000 of Bitcoin. That's Bitcoin barely touching on its original purpose. Just barely touching on it. Like lightly tapping it, not even becoming its purpose, like a gold 2.0 or a store of value. That's incredible. I mean, the fact that price movement from here is many multiples. Good luck finding an equivalent return in the mainstream markets, unless you want to buy some like cannabis stocks, which are arguably pump and dump schemes.
Well, I think it's hard for people to come to grips with the fact that these types of returns are possible, especially. So that's another thing. Is it too good to be true? Like, obviously, if Bitcoin were to grow into the total addressable market that we're discussing here, like this price appreciation, it's inevitable, but like it's something we can sort of see right in front of us. And I think people are sort of scared, like, is it too good to be true? Like, there's no way it's that easy.
And for good reason. Most people, when their friends tell them about amazing 10x returns, they go, wait a second, what's the scam? And most of the time they're right. There's like typically a scam going on. Bitcoin trying to become a new money or a new store of value, its pathway was not going to be linear. And in fact, Satoshi hard-coded it in to not be linear. He wanted speculative bubbles because that brings around greater awareness. Satoshi fundamentally understood humans' primal nature.
Greed.
Exactly, and it's brilliant. Because Satoshi, the code, I would argue, just enables the social sort of like socialness of the money and the game theory behind it. The code just makes that all work well. The code really, is more Frankenstein from a bunch of old code over the last 30 years. It's not really like a breakthrough in that. It's a breakthrough in human incentives,
Right?
which is magnificent. It shows that Satoshi actually understands humans better than like code,
Exactly.
which is really cool.
You talk to any Bitcoin developer who's very familiar with the code base, they'll be the first to tell you, like, Satoshi was a shit developer. Like,
yeah. In fact, he had a big bug initially, right? Like where you could essentially mess with the supply.
Yeah, the inflation bug. It got exploited, in 2011, or was it 2013?
It was 2011. Well,
2011 was the block reward that was like $1 billion, but it got fixed because Coinbase was never paid out over 100 blocks.
And also, Bitcoin had no value then.
Yes.
So it was sort of immaterial.
Yes.
Yeah, I mean, maybe there's like 1,000 people
No,
working on it at that time.
Yeah. No, and I would encourage all you freaks out there listening to this to go to the NakamotoInstitute.org and check out the complete Satoshi. And if you go through the emails of 2011, you can see how they handled this bug. And it was literally like an email like, please upgrade like version, whatever it was.
Yeah, everyone should go read Satoshi's early writing. And often with almost all my articles, I quote Satoshi at least once. He thought about a lot of these things. So people go, oh, well, Satoshi didn't think of this or that. Well, actually, he thought a lot about this. You should go read and see his thoughts directly. Now, don't hold it as like the Holy Grail, the gospel. Yeah, like this is just if you want some insight on as to how the original guy who made this all happen. It's an interesting context.
That's another recurring topic is you can go back to bitcointalk.org too and find conversations being rehashed today that were hashed out 7 years ago, right? And the one
Oh
thing,
yeah.
So like Hal wrote the concept of Bitcoin banks, like Bitcoin as a settlement layer in like 2010.
Dude, Hal was super bullish.
Right?
Hal predicted like 10 to 100 trillion market cap for Bitcoin when almost no one even thought that was possible.
Yeah, and he also, not only was he bullish, but he was prescient enough to sort of mentally see how this would progress and realize that Bitcoin probably isn't at the protocol level, probably isn't going to enable coffee purchases. But
the Bitcoin banks.
Yeah,
that centralization. Look, it's all about efficiency, right? And you can't put everything on the blockchain. I think the crypto community as a whole has finally realized that putting everything on the blockchain is not the way to do it. And so Bitcoin is about maximal efficiency of compressing data and storing it on chain of only the most valuable data. And I think that's incredibly intelligent and the right way to go. And we've seen that largely validated by the market.
Validated by the market, and then also validated by other projects which are starting to adopt Bitcoin's narratives. Ethereum in particular is starting to really hone in on moneyness and being a sound money in particular.
Yeah, you've got Vitalik talking about a hard cap. That was, I think it was published on, was it the April Fool's, but it wasn't a joke. And you see a couple of different individuals in the space like Spencer Noon and a few others trying to meme it into existence. But it's sort of like watching your uncle like dance the Macarena. It just looks fucking weird. It's like, wait, I thought you were a world computer, DApp platform, DeFi, and now you want to be a sound money, and then you were talking about CryptoKitties in the blockchain last year, and now you want to talk about like Austrian versus Keynesian economics and the virtues of a hard cap. Like, welcome to my world. I've been here for the last 7 years or last decade. Okay, and then you're gonna FUD on, will Bitcoin security model work long term? Will transaction fees replace? A lot of Ethereum people. This is why I wrote this. A lot of Ethereum people use this as like, Bitcoin hasn't figured out its security long term. And when I dug in, I'm like, wait a second. Actually, it's fine. It's trending just as a market would. It's trending in the right direction. And a lot of them are being really extremely disingenuous when I'm like, you're worried about Bitcoin security model and you haven't even figured out your monetary policy. And you've got a bunch of nerdy engineers in a room who come up with the inflation rate at a whim. And you're worried about Bitcoin's very stable, predictable, set in stone monetary policy. Get out of here. Like you're fudding for just to throw a FUD on Bitcoin. You're not actually having an intelligent debate.
No. You're grasping at straws, and then let's look at facts. So like my favorite dominance indicator that's been rising, we talked about this on Rabbit Hole Recap this week. If you look at percentage of fees paid to miners overall across the cryptocurrency space, as a dominance index, Bitcoin is 92% dominant. Like 92% of mining fees are from the Bitcoin network. Ethereum's at 8%, but if you want to talk like dominance and actually how secure your blockchain is, Bitcoin is far and away the most dominant chain.
It's the Bitcoin double standard. Fees are too high. Fees are too high. people won't use Bitcoin. Fees are too low. People aren't using Bitcoin enough. Bitcoin can't win. People are like, oh, well, fees are too high. Fees are too low. Fees are fine. Fees are just a metric that quantifies people using and requiring transactions to be validated in a certain amount of scarce real estate. It's fine.
No, they're fine, and they're obviously working. Like, Bitcoin is attracting the most hash power because it is going to be the most profitable for people's paying for that hardware.
Yeah, and there's the flywheel effect that makes Bitcoin's block space very unique, where as the security becomes higher, then demand for the block space increases due to its thermodynamic guarantee that the transaction will not be reversed.
Yeah.
And that's why I love to frame it as a thermodynamic guarantee, because that's what it is.
The laws of physics come into play.
That's what's so beautiful about Bitcoin is it uses a brilliant architecture of all these seemingly simple ideas, but when you put them together, it's incredibly brilliant, using provably burnt energy in the real world to validate and protect something in the digital one. Satoshi not only knew cryptography, economics, computer science, but also physics and game theory and human behavior. And I think that's what makes it so thrilling and compelling. And that's the only way to evaluate crypto networks as a whole, is we should view them holistically. And when Ethereum people or other projects go develop, the sweaty Steve Ballmer, developers, I'm like, yes, I like developers too. But we must also think about other things as well that make this all work.
Yeah, it's and I always go back to the analogy of Bitcoin just being the sort of source. I always, in my mind, I don't know, this is a weird visualization, but the way I visualize it is like the Bitcoin blockchain is something analogous to what existed in Sumerian times, where there was a town center where you would go and you would basically you would inscribe your debits and credits, and you would go to a center of town to basically balance the books of debit and credit. I view Bitcoin as not a personification, but like a mechanized version of that. It's like a pillar of light that exists in the center of town that anybody can come to and just anchor in. Like, hey, I'm doing this right now. And you go to the well and you say, hey, I'm transacting right now. It's going here, and that's all you have to worry about. That's how easy it is, simple it is.
It's the ledger that everyone looks at.
Exactly, and this goes back to narratives and simplicity and stuff like that. And so, like, Bitcoin is just being like stored digital money and being that pillar in the center of town that anybody can go to and transact in is very simple. And like you talk about, like, so Ethereum in particular right now, they're trying to meme programmable money into existence and think that's going to lead to mass adoption.
And Quantum Narratives was an article I wrote before this most recent one, which is around the ebb and flow of narratives in the crypto space. And the quantum part is that, Schrodinger's cat is essentially where the thought experiment is you have a cat in a box, and there's a radioactive material. If the box is sealed and you can't observe the cat is both alive and dead at the same time. Essentially, states that are unobserved can be in multiple states at once until observed. My argument is that, my analogy that I make is that narratives in the crypto world similarly can coexist and be in this kind of foamy state where world computer, DeFi, Uber on the blockchain can all exist until critically observed. And then the wave function collapses upon reality. What is real? What is the state that is the actual physical state versus all these possible states that it could be, all these possible narratives that blockchain tech could be? And what we saw in 2018 is that collapsing of the narrative, the collapsing of all these different narratives or all these different quantum states into what's real. And we see that collapse upon store of value. And we see the Ethereum crowd realizing that and trying to pivot the narrative into that as that quantum state collapses.
No, it's been hilarious to watch unfold. And again, like, going back to me at least, as an outside observer, somebody who's actually, I've been following Ethereum's progression pretty intently for a while now, just because I'm infinitely curious about and fascinated by the social sort of phenomena that it is. But if we're talking like memes and effective memes in particular, I think them clinging to programmable money is like hilarious, because I don't think that's an effective meme, because programmable money, you go to like the people who are most likely to use these assets, and again, Bitcoin and other cryptocurrencies, their main purpose is to be there as a last resort, like to be the store of value when your government or central authority is trying to censor you, and it's really like last resort sort of value. So like programmable money, like going after the people who need that, which is rich people are probably an older cohort and don't understand computer science or anything like that. They hear programmable money are like, what? I have to program my money? I just can't like keep it in here?
Totally. Vitalik is, I would argue, a more brilliant marketer than he is an engineer, which he's also a very smart guy. Like, but he was brilliant.
World Computer was great.
Oh, fantastic meme. Silicon Valley bought it hook, line, and sinker. None of Silicon Valley ever Googled him and realized, he tried to build a Bitcoin quantum miner before that.
Quantum miner, he's raising money for it, freaks.
Yeah, but no Silicon Valley VC has ever Googled that and actually read that. So
due diligence. Nobody does due diligence anymore. Johnny Dilly said this to me.
Totally.
Nobody
Yeah.
does due diligence.
Well, hey, no one ever got fired for buying an IBM. Same thing with like if Goldman Sachs went on something, or there's a lot of great Silicon Valley VCs, and if they invested in something and you invested alongside them, then you're not wrong. So Vitalik perfectly crafted Ethereum's narrative to resonate with Silicon Valley. Silicon Valley, it was irresistible. It was what every single baby boomer VC wanted, and what every single engineer in Silicon Valley wanted as well. For the baby boomer VCs, it was the decentralized internet they had imagined there in the 1990s and early 2000s. It's what they always had wanted. Aligning incentives, common standards, decentralized, it was everything that they had ever wanted. And then for engineers, it was the recognition, to be recognized for your efforts, and to, now my shiny code could be published, and then I could make money off my shiny code that has no use case, but it validates that I built really cool shiny code. And then we've seen that largely become unraveled in 2018, right? As people woke up to reality, which is that, like, well, all companies have to solve, or all protocols have to solve a problem. Does your protocol have protocol market fit, like product market fit? From a classic product mindset, I mean, that's what I applied. I'm a Bitcoin realist. I thought this stuff was cool. I mined Primecoin. I fly drones for fun, and I've signed up with the same facility with Hal Finney for cryonics. I'm being cryopreserved when I die.
Boss.
I'm a pretty weird guy. Like, I like to check out all this stuff. But from a product mindset, what problem are we solving? And how does a blockchain elegantly solve that problem?
And again, going back to what I was saying earlier, I like to think that I'm a representative of the masses, to the point where, like, I only use 3 apps. Like, when you make the switching and the mental cost of interacting with your system so high, we have to think of like token economics and crypto economics, and like thinking of something like MakerDAO where you have like interest rates moving at any given point in time. It's like, I don't see how this makes it past a certain demographic, right?
Also, like, I ran into Cyrus in person, the chief risk officer at Maker. Him and I have Twitter battles, which also I would, if he ever hears this, I would encourage him to go and actually, he was a big fudster on Bitcoin's security model long term, so I think he should, read my article, because he was one of the ones I tagged in it, because he was, really focused on, this is a big issue. And I met him in person. It was nice that he said hi. I liked, even with the people I debate with on Twitter, I like to say hi in person, so I appreciated him coming and saying hi. But, him being the chief risk officer, like, these are incredibly complicated game theoretic sort of things. Like, I don't even know if the smartest people in the world put in a room could figure this stuff out, So, like, I hope he succeeds, but it's very, very hard.
That, and on top of that, like, so MakerDAO in particular, for you freaks that don't know, they have an interest rate that's not set by the market, not set by any mechanism. It's voted by committee, and they've been raising that interest rate to help pull the peg of DAI to the dollar up, closer to the dollar, for the last several months because of liquidity. I don't want to say problems, but to deal with liquidity stuff.
Yeah, essentially maintain the peg.
Exactly. But it's like going... What was I going to say? Well, like Maker down, but like.
But the risk and.
Oh,
like,
here's what I
yeah.
was gonna say. Like, so all these DeFi, so like DeFi's taking over the world. There's $500 million locked up in DeFi or whatever the meme is right now. Like, in my mind, it's just these enthusiasts using these products and pumping these products. It's not real use cases. It's people who wanted to succeed using it, but not out of utility, more out of altruistic. I want to make this a thing. Like,
and I want to highlight something very important here, which is that. Which me and Elizabeth Stark have been very vocal about this. Lightning is not DeFi. Like, DeFi is a meme that Ethereum created to propagate.
what is DeFi? What is
radical
decentralized
markets?
finance? What is
decentralized finance. I
What
mean,
is-
it's all memeing.
If I give you a
Yeah.
loan, is that decentralized finance?
It's all just memeing something into existence typically for their financial benefit or for their
Well,
product success.
well, let's try to define decentralized finance the way they believe it is. Like, what is it at the end of the day?
I
Like,
think something important to highlight, though, is that when you go to a DeFi website and they compare Lightning, like the amount of money locked up in Lightning channels compared to DeFi, that is not an appropriate analogy for many reasons. One is that you're comparing stock versus flow, which is completely disingenuous. So Elizabeth and I have been very vocal about this because we think it is more of like a subversion technique by the DeFi community to lump Lightning into there and be like, oh, look, we're beating Lightning. No, it's not about that. Lightning is about flow. It's highly experimental. There are limits to how much you can even lock up in a channel.
yeah.
Like, and
It's
so
like
they're comparing it to
0.16
Lightning.
Bitcoin right now.
Yeah, and like all these guys are comparing, like they're like, oh, look how much is Maker versus Lightning. DeFi, Ethereum, DeFi is like beating Lightning on Bitcoin. And it's like, no, we're being responsible. This is very risky. We take our Bitcoiners, while they may seem harsh and very like
Well,
conservative.
Lightning, I would argue, is inherently less risky because there's no leverage involved.
I don't disagree. I think Bitcoiners are more genuine about how much risk you're taking on interacting with protocols, whereas like Ethereum DeFi is YOLO. And look, that I get that. I come from I've been in Silicon Valley for 7 years, built early small mobile products. I worked at Uber. I get it. Like, don't ask for permission, beg for forgiveness. Servers catch on fire. That's a good thing, but not with decentralized rocket launches. Like, those have to be perfect, and you cannot just YOLO it. It is. I like experimental stuff. I'm an open-minded guy, but you got to be precise about this. You have to be open about the risks. Where Lightning, like, reckless was the meme,
right.
versus like, now 20% interest rates are really high for these loans for Maker. I mean, and
On top of like 150% collateralization, like
there's a lot of Ethereum people who are like, whoa, wait a second, are the interest rates are super high on these now, and a lot of people are getting they're surprised by this interest rate jump, and rightly so. I didn't expect this either. Whereas like in Bitcoin, it's like, this is reckless. Don't put your money in it.
exactly. Well, and another thing with Maker in particular is like a lot of people thought that interest rate was mechanized, and I was actually surprised to see that people didn't realize it was an interest rate by committee. It's literally what we're trying to get away from. Like a Federal Reserve 12-person committee sets the Fed funds rate.
What's the right rate of risk? That's really, really, really hard to determine, and something I'm going to touch on later this year. After I decided, there's a lot of different things you can cover in research. Digging deep into Bitcoin will answer almost all of your questions. I learned a lot digging into it myself.
Why do you say that?
Because you learn about the trade-offs made that Satoshi thought through. You learn about like basic trade-offs for blockchain tech. You learn about human behavior, and like, for example, proof of work versus proof of stake.
Well, that's the other thing with Ethereum too. Like, if that's what I wanted to mention earlier when I forgot is with the transaction spend. The miner fee spend dominance index with Bitcoin at 92, and Ethereum in a far second at 8%. But like, even they can't use that stat. They can't even say like, "Hey, we're number 2." Like, we're like behind Bitcoin. We're the second best like blockchain from a proof of work fee perspective, because they plan on moving to proof of stake. Like, they can't even like use that as an advantage, because
they would have as a meme.
That would be basically undermining the future roadmap that they have, right?
I thought it was actually interesting to see Ethereum having transactional demand on layer 1 quite extensively. It makes sense with all the dApps on there, right? Like,
yeah, but it also like highlights.
Have you ever looked at the median transaction fee?
No.
It's very, very low. like almost zero. Actually, the median is zero, I think. Median being like the most common, not the average. And I actually emailed Nick Carter about it. Emailed Nick Carter. I was like, hey, I think Coinmetrics has a data issue. He's like, oh yeah, because it's median. It's the it's the essentially the most common value.
So what does that say?
Yeah, the demand for the block space isn't as high as Bitcoin's.
High. Yeah.
The demand for that, and
how do they even have 8% of that dominance index though?
Put in other words, the demand for that real estate.
Well, if the median's
isn't as high.
0%. Like, who's paying the higher fees and what for?
I don't know. I don't spend a lot of time digging into those transactions.
This goes back to my point. Like, I think Ethereum's a chain for enthusiasts who want to make something happen that probably will not work out. Like,
and experimentation's great. People should go try things, and that's where, like, there are, like, as a Bitcoiner, I have been through the space a long time and seen a lot of different things come and go, and I've approached it from a product and rational mindset of, like, what problem are we solving? How does it solve it? Survivability, probability of surviving, game theory. Bitcoin's in a great spot. It's fantastic. I've never been more bullish. We're in an awesome spot. And after digging into proof of work, so proof of work is efficient is my most popular article, digging into distribution, you're digging into hodlers, being the core lifeblood behind what makes these protocols work, is the shared illusion or shared belief in the system that really breathes life into it. And to look at narratives, quantum narratives, to look at the origins of Bitcoin with planting Bitcoin, to look at Bitcoin's security model. After digging into all of these, it's hard to be excited about other things because they make such horrible trade-offs. You're like, well, and I'm not talking about Ethereum, I'm just talking about in general. You make such horrible trade-offs. I'm like, I'm sorry, I just can't be excited about this.
No, and I want to harp on what you said with the shared illusion. I'm becoming more and more convinced that this is not even a shared illusion. Like, money, at the end of the day, like Bitcoin, like going back to our conversation in the beginning of the podcast of other store value assets having intrinsic value that can be tapped, that can be utilized other places, like Bitcoin, like, is actually a tool. It is something that exists in, like, the shared illusion, the quote unquote shared illusion of a store of value. In the past may have been a shared illusion, but, like, now we have, like, a tool. It's not an illusion. It exists. It is a vehicle through which we can store this wealth.
And I think illusion's kind of a strong word that I use for that, because some people think illusion, they think, oh, fabrication.
Yeah.
But the shared belief, I think, maybe a stronger word for it.
Let me find the no, it's not belief. It's shared recognition.
Shared recognition. I like that. That's a new meme. I like it.
Shared recognition.
That's much more solid than the other ones.
The shared recognition that this is a useful tool. This is I need to give credit where credit is due. I did not come up with this. Let me.
And words are important. How we phrase this and how we communicate this to the next wave of adherents or believers in Bitcoin is key. And that's something I spend my free time on, is, like, how do we bring in the next wave? How do we make the narrative compressed enough? Look, I'm a big libertarian, so sound money makes sense to me. But how do we explain sound money to maybe my brother, who's not really into this stuff, right? He's a geologist. Maybe more of, like, financial consent, or fair money, or free money. Like, it's freedom money. Like, that's what it really is.
Free speech money. After speaking with Andrew Torba, free speech money really resonates. And then shared recognition over shared illusion, I think, is very powerful. And shout out to Richard Bensberg.
Nice.
Who
Good
came
job,
up with
Richard.
That came out. Me, Neil Woodfine from Blockstream, and
Neil's great.
And Matt Odell got drinks this week, and we really honed in on shared recognition over shared illusion. I think that makes a lot of sense.
Totally. I think, like, when I got into it, there was Bitcoin Talk on Reddit, and then that moved to Twitter and Medium. We're iterating on different channels to communicate with people with, and right now we're on a podcast. And Marty does a great job.
Thank you, sir.
One of the few podcasts I actually listen to.
Oh, thank you, sir.
Yeah.
Well, it's only a thing because of people like you come and get drunk with me to talk about this stuff.
We're totally tober here.
Totally tober. What's the officer problem? We only drank a half bottle of vodka.
But I'm super excited about the people that come after me and you.
Mm-hmm.
We've had, like, Joe Rogan, like, talk to Andreas, and, like, Andreas is one of the few who was early in his communication style that was preserved through time. Whereas, as we saw, like Roger dropped out of favor due to his intellectual dishonesty, and also like
I'll push back a little bit. Andreas was very big on like feeless transaction or like instant
that was the
stuff.
meme back then. I was there too.
Meme. He clung on to the meme.
And that was the first PM at blockchain.
Yeah.
So
Yeah.
I remember the meme, but I was still like, wait, no one's using this.
No, and that's like, so that's another topic of conversation that I got onto with David Bailey is, and again, this came up this weekend. Like this weekend, like Segwit 2X battle is being rehashed on Twitter, and it's at some point like Bitcoiners in particular, like hardcore Bitcoiners, have to realize you don't want to become like the hardcore leftists in America who say if you do not believe in this and this and this and this, and you don't check all the boxes, you are not on our team. You are an outcast. Like I worry that Bitcoiners like turn into that. Like if you don't believe this, this, and this, and this, you are not in Bitcoin anymore. Like we have to be careful that we do not become the fanatical, crazy people who are trying to dictate conversation. And stuff
It's a tricky balance, right? Because we have to adhere to our core beliefs.
Yes.
But also,
you have to let people make mistakes.
Yes, exactly. And so that's where, like, I don't fault people for, like, look, I mined Primecoin. Look, I'm Dan Heddle. I mined Primecoin. I'm sorry. Sorry, not sorry. I experimented with it. It was interesting. I didn't sacrifice my great BTC for it, but I tried it. You know, I thought about it, and I keep coming back to Bitcoin over the last 7 years. So it's okay to think about other things. It's okay to explore it. But, like, and I believe in reconciliation as well. As much as I dislike Roger did buy my first company. And I've DM'd him a little bit on this, and I think he's pretty much set on his direction. But if he came back and actually apologized, I think it'd be good if we like said, okay, sure, I believe in reconciliation. But I find it very unlikely that he will apologize. I think it's almost impossible. But if he did, I would probably be like, all right, Roger, I'll give you a chance. I'll give you a shot. Yeah. Everyone makes mistakes. And you did some terrible damage to Bitcoin.
No, but I'm not trying to even like provide cover for anybody. I'm just trying. Let's be realist here. Like, and I've said this is another topic of conversation on this podcast a lot. Bitcoin is an expanding universe that we discover every day as more activity happens on the network, as more blocks are produced. Like we expand the limitation. We discover the limitations and the ways in which this network will be used, and you can't fault people this early on in Bitcoin's lifetime for having assumptions that were proven wrong. Like that's going to happen.
Again, Connor Brown comes up here. Connor Brown said, at first I was a Bcasher. And, you know, he read deep into it, and then he realized, oh, wait a second, actually I'm a little bit off the mark here. Mm-hmm. But it takes a little while. You know, people think about, oh, well, is Bitcoin the MySpace versus the Facebook? Mm-hmm. Right? And rightly so, they should. They should examine it using the mental models that they have. And our best bet for Bitcoin is to make the narrative for Bitcoin so simple and easy to digest that when they begin their journey into crypto, they find our content, they read it, and they're like, oh, wow, okay, this is really, really, this is insightful. And that's how they then go evaluate everything else. That's our best bet, is through knowledge, information sharing.
Quality information.
Exactly. And that's what I like to, hopefully I write, you know, this last article was very lengthy. I apologize. I normally write it much more succinctly.
It was a very, very good flowing read. It was 20 minutes, but it did not feel like it.
I stand on the shoulders of giants. I mean, I didn't come up with all this stuff. I cite people in there, and there's some people that additionally like provided insight. This is very much a community thing. I'm just trying to distill the narrative to be comprehensive. Same with my proof of work article. Like, that was largely a lot of other people's thoughts, including Paul Stork's. Like, you know, I had to reread his article 3 times because he's very eloquent. But,
reread it 3 times. That's like 8 hours of your day. He writes like 2-hour blogs.
Well, he uses very big SAT words, whereas I try to make things a little bit more understandable for the layman. So yeah, I think what I'm really excited about is in the future, I think the narrative will be so compressed that we'll have that like aha moments when like consensual money or something like that, like a meme like that, right? Like even the leftists on the West Coast, that makes sense to them. You have consent over your body.
I think free speech money is is the strongest right now. 'Cause it's
Well,
like-
we're gonna. What's great about Bitcoin's marketing is that we have a decentralized marketing approach. You
Right.
meme free speech money, I meme consent money, and we'll see which one resonates with our target audience,
yeah.
and then whichever one works is either one's great.
win-win for both of us.
Precisely. Yeah, it's incredibly exciting. I come from my core role in tech has been growth products and growth marketing, and same with actually Peter McCormick and Pomp. So if you notice how they understand how memes work, they understand how narratives work.
So that's the interesting thing here at TFTC. We don't have like typical marketing backgrounds. Trying to figure that out. Like, we have stacking. Like I think we're
Stacking
good
Sats
memers.
is awesome. That's a good meme.
Stacking Sats.
Wait, Lolly, dude, Lolly, by the way, awesome.
The Lollipump Guild. We're all a part of the Lollipump Guild.
Pump it.
If you're buying anything online, make sure that you're checking to see if the merchant that you're buying from is from Lolly.
Why wouldn't you want cash back
And they're
in
not
Bitcoin?
even not from Lolly. Excuse me. Has a partnership with Lolly where you can get cash back in Bitcoin.
And for the listeners that have made it this far, Lolly is great for newbies because Bitcoin is perceived by your friends and family as magic internet money.
Mm-hmm.
It's hard to get them to take their dollars and buy Bitcoin. But when they earn Bitcoin through just buying things they normally would, I've seen this, and I've been trying to get people into Bitcoin for 7 years. This is one of the most powerful ways to get people into Bitcoin because they get it for free.
What have you seen in particular? What are the reactions?
There was a couple of friends of mine to where I was like, hey, by the way, before you buy stuff online, you use this Chrome extension. They're like, whoa, I can just earn this magic internet money, aka Bitcoin, for free when I go shopping online. And I don't want to overly generalize who that group might be, but people who like to shop online a lot, I think it's great because they get it for free. And while, as Mark Twain says, to make a man or woman covet a thing, all you have to do is make it hard to obtain. It is the aha moment where they at least have it. They may have not had to obtain it very hardly because it was effortlessly sort of obtained, but at least they have it now. Mm-hmm. And that now they pay attention to it. And then maybe they'll commit some more of their dollars to it later.
Right.
It's a little foothold.
It's so the man who helped me start this podcast, Lewis Roberts, formerly from Barstool, now the CEO and founder of Any Day Rosé. But
Nice.
he is
Rosé all day.
Rosé all day, baby. He is a huge believer in Lolly, and he's somebody who in my life has really opened me. He is, in my eyes, somebody who gets the mass marketing and how to sort of hone into the given sort of theme and vibe of pop culture at the time. And he is convinced, somebody who's seen some pretty good trends play out, Barstool being one of them, he looks at Lolly and is like, this is the way to get in the hands of the masses.
I'm
just earning it.
I was at Change Tip back in 2015 and we did the micropayments over social media.
RIP changed it.
Yeah,
That was my
yeah.
favorite way to send people Bitcoin for the first time. Hey,
Thanks.
send I have tweets.
Nice.
So-
at Change Shape.
So I have shout out Zuki_Chaylock. Actually, photo cred for my avatar from him as well. But he's the first person I ever sent a change ship to. A buddy from
that's
Chicago,
awesome.
buddy from DePaul that I
Change
went to
Tip is
college
trying to,
with.
it's trying to make Bitcoin transactions fun. It's more than a like. It's more than a favorite. It's like a little attachment of
Send
value.
him a beer and you designate what the price of a beer is.
Like a $4 beer, and you're like,
Yeah.
here's a beer, bro. And you
Yeah.
do a little beer emoji and a cheers.
Yeah.
Little too early, wrong timing. Bitcoin 2015 winter was very, very harsh. It was very, very cold. But yeah, there's so many cool ways to stack sats now. I actually, after trying Lolly, I went down the rabbit hole.
Which one?
Stacking sats. Oh yeah.
The hashtag?
Stacking sats, but the products around how to maximize efficiency. So what's cool about Lolly is what they do is they take the referral fee that they get by referring traffic from Lolly to the merchant
Merchants.
website,
Yeah.
and they split that referral fee with you. Now, this isn't a new concept. There's Ebates as well, and a few others that do this.
That's what Lolly was birthed out of the Ebates team.
Right. Makes a lot of sense.
Mhm.
So what's cool is not only should you do that, but with your credit card, you already get 1 to 4% back. So that compounds on top of that. So we're talking about, Lolly, it's 3.5 to 9%. That's plus your credit card, and there's actually other ways. turn a little bit more stats.
Let's jump in.
Or sorry, sats. So
The Tito's is feeling pretty nice right now.
there's an app called Pay, P-E-I,
Mm-hmm.
and I'm not even going to show my referral code. I've just been trying it out. You can stack on top of that
How so?
on like Lyfts and Ubers. So what they do is like they work with Lyft and Uber and other companies to like be incentivized to essentially like you connect your credit card accounts. So you are giving up some of your data. To be explicit, you are giving up some of your data,
You're getting paid for it, I assume.
but you're getting paid for it, and that's like a 1 to 3% on top of
already
Lolly
paying.
and credit cards. So we're talking like triple stack sats.
And that's what we aim to do here, is to educate you freaks on how to stack sats most efficiently and most and to compound the sats as efficiently as possible.
Compound those those
Pay,
sats.
P-E-Y?
P-E-I.
P-E-I.
yeah.
Oh, pay.
I've been playing around with it a little bit. I need to dig in a little bit more, but so far it's worked. And they give you rebate in Bitcoin. So that's where like there are other ones who don't give you rebate in Bitcoin, which I won't mention. I'm just talking about the Bitcoin ones. So you got Lolly plus Pay. Gives you a little bit more, which is
Boss.
kind of cool.
Compound the stacking, freaks.
Yeah.
Dan, I'm drunk.
Yeah. We've had a good time out here on the roof. It's such a beautiful day. It's hard not to like talk for. We could talk for another 3 hours if we wanted to.
We got plenty of time. What is there anything else in particular you want to talk about, or?
Let's see. So we did cover the meme of alt season, but there's another one. Oh, the risk off trade.
Oh yes, let's
Yes.
jump into this. Is it real?
Well, I was quoted on CNN as to as to have seen it.
Well,
So
I mean,
okay, I've waited 7 years. So Bitcoin is definitively a risk on trade that whole time. It's very risky. Actually, the altcoin bubble in 2017 was largely because of the riskiness of the mainstream financial world. People are chasing yield, and that was like the final bubbly top.
Mm-hmm.
But Bitcoin was purpose built to be the gold 2.0, the store value, the
safe haven.
the safe haven asset. When you don't trust anyone else, as Satoshi put it, the core problem is with central banks, and he's right. And that's why he purpose-built Bitcoin, implanted that seed in the middle of the financial crisis. Bitcoin, amongst everything else, is a vote for yourself, a vote for freedom, a vote for like a non-correlated asset that you can store your value in. And so we're starting to see tremors in the mainstream financial world. And on Monday this week, during blockchain week, the mainstream markets dipped significantly, and Bitcoin went up 10%. And there's a few other publications alongside CNN, which I was quoted in, talking about Bitcoin becoming the risk-off trade, including Pomp and a few others, and Ari Paul. I've been talking about this for a while, that I believe that this meme could come into existence by accident. Markets dip, mainstream markets dip, Bitcoin goes up. That coincidentally happens 3 or 4 days in a row. People talk about it becoming the risk-off trade, and then it becomes that. But that's what it's made for. So it's not lying. It's just like finally making it a thing. It's finally making it like what it was always meant to be.
No, and the huge debate around this topic in particular this week is this price pop coinciding with the fall off in equities and depreciation of Chinese yuan, correlation and not causation.
So the way that I phrased it is that for a moment we saw a glimmer that Bitcoin might be the risk-off trade, because also that trading volume was largely dictated by institutional money.
That, and let's talk about the conditions which led to this price action in particular, and it's, again, the trade war with China. And so that's, when I worked at the Managed Futures Fund, that's a lot of what I covered was currency markets, trading currency markets, and basically as a result of this trade wars basically result in a race to depreciate your currency as much as possible to make your exports as palatable as possible to the rest of the world.
Who would have guessed people would flee or flock to a safe store of value when a president is largely dictating the economies of the 2 biggest economies in the world?
Yes, the 2 biggest and most intertwined economies in the world.
Don't trust, verify. I choose to put my trust in mathematics.
Yeah. Well, but you look at so let's try to be as scientific as possible not scientific,
science.
not as scientific as possible, but we don't know if this is like a risk on trade. But here's the scenario that happened: like the trade war heats up, tariffs become more intense in the mainstream and like more threatened on China. And basically, what happens is you see, number one, there's a medallion in Hong Kong, and the price of that went up precipitously. And that medallion is typically used by Chinese nationals to store capital through which they can get it out of the country. On top of that, you have the yuan devaluing against the dollar, and then Bitcoin appreciating pretty heavily against that. While all this is going on, equities are going down as well. So, if you're a short-term trader and you're looking at this 1 day, 2 day movement, it looks like they were moving inversely. Again, correlation is not causation, but I do think it was a first little shot across the bow of international markets, like, this could be a safe haven play.
Yeah, and this is the first time where institutional money by volume led this price movement. That is what's interesting. And that's where I think the meme does have some justification as being real. Is that, this isn't back in 2014, 2016 where it's all retail traders. This is CME volume is what led this market. That's what's important.
The CME volume went up like 10x, like
exactly
its highest day ever.
Institutional money, and Ari Paul and a lot of the experts, like a lot of the big crypto hedge funds.
Even Lawmaster came out. Even the
Larry
Cermak.
Yeah.
Even the staunch skeptic came out like, this was actually led by serious inflows into institutional.
Yep.
From institutional clients, excuse me.
I've waited 7 years to see this moment.
Right.
To see the moment where, like, the largest players... This is the Game of Thrones, which tonight is the season finale, or the series finale, right?
Series finale.
This is the final game. This is the real game. Bitcoin survived to make it to the final game of the game. Like, this isn't the amateur league anymore. So
let's say it arrived and this happens. Is this just an anomaly? This one-off, 1 day, 2 day? Do you think it'll take more time for this to become common, or does it?
It'll take a long time, yeah. But at least we made it to the final round,
right?
And I'm still hodling. The fact that we made it this long and it survived, and like we're thriving, and there's all these companies being built, and that like you've got ex-Wall Street guys memeing that Bitcoin is a risk-off trade and that is gold 2.0. Like, we did it. Like, that's the meme. Like, it's what Bitcoin was purpose-built for 10 years ago.
Well,
that's what it was made for. This isn't like a fake meme. This isn't an attempt to make a meme. This is what it was made for. Bitcoin, by hodling, you will be set free. By hodling, everyone in the world doesn't have to worry about the politics of, is AOC going to be elected or is Trump going to be elected? You vote for yourself. You vote for, in a world of uncertainty, you vote for you. And that's what every human should do, because you are a free human no matter where you live, and you deserve to be free.
And you deserve... Yes. Thank you for saying this, because this is actually got into a debate with a friend this week about the concept of collectivism versus individuality. Like, the world is losing the concept of individuality, picking yourself up from your bootstraps, taking care of yourself. And
socialism is at an all-time high.
Yeah.
As Deutsche Bank's A Journey into the Unknown report puts, which, by the way, every Bitcoiner should read this report. It's fantastic. 800 years of financial history. If you really want to know why Bitcoin's valuable, look at this. They don't mention Bitcoin once. But when they zoom out to all financial history, we are truly in a journey in the unknown.
And that's
including socialism or populism. Those are an all-time highs compared to right before World War II. The most equivalent time period is right before World War II. Now, I don't think we're going to see major wars like that happen again.
I think Bitcoin provides the first opportunity for a bloodless, peaceful revolution.
Absolutely. Bitcoin is inherently peaceful because you voluntarily choose to put your money into something that is very hard to seize and is immutable. And by doing that, you do it in a non-violent way. Bitcoin is very much agrees like with the non-aggression principle and like the adherence to voluntary action. And that's what freedom is about, is like people should choose if they want to or not. Yeah,
and it's funny because it feels like people don't want don't want to have that decision. They want it to be decided for them. And
Unfortunately, we've seen the state start to dictate largely our tolerance for risk with the Federal Reserve. We've seen our state dictate our tolerance for security, which is like TSA and freedoms, gun policies, etc. And that's where I think, hopefully Bitcoin, because money is one of the most important things in the world, because it is the representation of all the stored collective time and energy. Energy. Hopefully that changes the dynamic of other freedoms, because it's the most compressed version of our freedom stored into a simple unit value. But I hope that brings us greater freedom across all things, speech, thought, privacy, everything else. That's where Alex Gladstein and I are a good buddy of mine from San Francisco. He's the chief strategy officer at Human Rights Foundation.
Well, you freaks listening to this episode, if you've listened to a couple episodes before this, I'm sure you heard Alex because we had a great conversation as well.
Alex is a huge proponent of freedom across all types of freedom in the whole world.
You want to talk to somebody who actually understands the granular problems that each country has. He can spitball you about Yemen, Zimbabwe, Namibia, whatever it may be. He can tell you the crux of the problem going on, the cause of it, the people in charge, everything.
When Alex wrote his Time article, Bitcoin is about freedom, that's when I reached out to him. And since then, we've become pretty good friends. I'm even going to the Oslo Freedom Forum, not for work, for fun. Because freedom is why I got into Bitcoin a long time ago, 7 years ago. It's what I believed in. I'm a libertarian at heart. The freedom to transact, and Silk Road was a great example of what you could do with that freedom. You don't have to participate in that, but you could. And the idea that you could, to me, I didn't know how the technology worked, but I was like, if it could enable this is magical. And then from there, it hooked me. I had to go learn more about it.
Yeah, it's like we're rediscovering the principles of the founding fathers who wrote the Declaration of Independence in 1776.
So hot take here. Founding fathers were about decentralization.
Oh, totally. And
States' rights.
yeah, that's what I wrote about in the Bent this week. Is there's a natural entropy that's existed since the Declaration of Independence was signed, right? You had that is the peak of freedom in America, was literally when we told King George the 8th or 3rd? The 8th, to fuck off, and we were our own free society then. And at that point in time, we were the most free that we ever will be. And since then, there's just been a natural entropy of centralization and loss of freedom and decay of freedom. I would argue we are still one of the most free, if not the most free country in the world.
And I still love America. We've got a lot of problems, but I love it so much that I want to help try to fix it.
Exactly.
Right?
But you can't get complacent. Complacency kills. That's another theme.
Totally.
In sometimes you have to fight for new freedoms, and Bitcoin is the manifestation of a representation of freedom in the digital age, and we need to fight for that.
Exactly. Just because we score a C on the test and everyone scores a D doesn't mean that we can just rest and be like, okay, we did a good job. No.
Exactly.
We're America. We're a great country.
We need to strive for more freedom.
Precisely.
If we see something that provides more freedom, that's what America, the idea of America is all right, acquire that and make that.
In every country in the world, I believe in humans. Yeah. Fundamentally, that is who I am. I'm a humanist.
Dan, we're about to have the Step Brothers. Are we just best? Are we best friends?
Should we do a little high five?
Yeah. And I think this is where we end it because I'm getting drunk.
Yeah,
it's been a great. This is 2 hours.
This has been great.
2 hours in.
Cool.
It's always a pleasure. Like I said, we're on a semi-annual schedule right now. Maybe we'll increase that to quarterly.
I think quarterly might make sense, yeah.
Yeah.
Thanks for having me.
Dan, thanks for joining us on the riff. I hope you enjoyed the Bloody Marys. I'm sorry we ran out of ice.
This is great. Thanks, everyone. Cheers.
Peace and love, freaks.